speaking back to. You made this mess and left me with the pieces. Now I wanna burn all the bridges between us. I can't focus, I can't forget. I've been thinking too much lately. I just need to clear my head. I just need to clear my head. I've been stuck on memory, but it's not like I need it. And you may have some history, but we don't have to repeat it. You made this mess and left me with the pieces. Now I'm gonna burn all the bridges between us. I can't focus, I can't forget. I've been thinking too much lately. I just need to clear my head. I just need to clear my head. I just need to clear my head. I just need to clear my head.
Yo, yo, yo.
I just need to clear.
You guys ready to get going?
I just need to
I just need to clear my head. So I listen to repetitive music. All right. All right, let me get my drawing tool. Okay, got the drawing tool. Now I got to pop my chat. Papo el chato. Okay, I'm going to move that over there. Telling you, I'm still not used to only having one screen, and I don't think I like it, even though it's huge. I don't like it. What kind of person only has one screen? Happy day, Maida. All right, welcome to Forex.Today, a YouTube community of 16,000 foreign exchange traders. We're here to align our satellites, synchronize our watches, and get your trades on. Let's go. All right, so let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. G'day, mate. How are ya? How's your mum? Happy Monday, everybody. My name is Wayne McDonald. I'm a currency trader just like you. Here we're going to talk about everything Forex, whether it's technical analysis, fundamental analysis, trader psychology, whatever. You're the boss. I'm just a humble currency analyst that will share my thoughts and my opinions, but with an overriding goal of teaching you how to do it yourself. My goal here is to create not just successful traders, not just profitable traders, but independently thinking traders that can make wise decisions on their own and then have the skills and tenacity and discipline required to actually execute those trades properly. So that's what I hope to accomplish, and I hope you buy into that vision as well. Traders Way is a sponsor of our community, so visit tradersway.com. Why? Why would you do that? Well, you're a broker, or sorry, they're a broker, you're a trader, you need someone to execute the trades for you, and that's what they do. They actually execute your trades into the interbanking system. They do it with low fees. They do it quickly. They provide wide swaps or big swaps. These are all things that you want. In particular, you want your broker to execute your trades into the interbanking system. And you think, well, of course, that's what they all do. No. Many, if not most brokers are actually trading against you because they think you're a crappy trader and you're going to blow out your account. So why would they put the interbanking trade in the interbanking system when they could keep 100% of the profit because they figure you're going to blow it up? Traders Way is not that way. So they actually execute your trades. They do it quickly and with narrow spreads and provide you the big, full, fat swaps. So you're like, if that's the type of organization you want to partner with, because remember, you're starting a successful Forex trading business, you're going to need an execution partner. Think about the one that is reaching out to you today up front before you're even a client and saying, hey, we want to provide you education because we want you to succeed, because that'll make you a better client. Like, that's the kind of partner I want to work with. So thank you, tradersway.com. Ciao. Here's we are now. Yeah, cool. So that works. So so here, this is where we left off last week. No stimulus down. Yes, stimulus up. And we're caught somewhere in between. Cool. I'm short at 18.5. What's that? The interesting thing is, this is not like an ideal buy here for a Fibonacci. And you also see that the 55 is currently still in control. But part of our trade planning last week on this pair was this suggests a lower high, doesn't it? Wasn't that the whole point of the conversation? We spent a long time talking about this. If you were a buyer down here on this dynamic level of support, it makes sense, but there's a high probability it won't make a higher high, and you have to be prepared for that. And you should be able to understand where that would likely occur. Sure, you could make it simple and say, well, a double top is the same as the other. Okay, that's fine. But we have other more important, or let's say less obvious rules of engagement. That'd be things like, here's a monthly pivot, here's the weekly sell pivot, and you put them together, and sure enough, the monthly was the one. Also, how about the first hour of the new week? That's what this is. How many people attended Off the Charts with Wayne McDonald on Sunday? I thought I had a link somewhere. Hello. I don't know where it is anymore. All right, I had a link. I don't know where it is now. I thought I had the link to give you. I don't have it anymore. Not there. All right. Cool. Well, yeah. So one of the main reasons I do that event is to entice you and lure you back to your home office, because you might be out shopping, you might be hanging out with friends, you might be doing yard work. And I'm trying to get you back at your charts at exactly this time, in that hour. So I start an hour and a half before so that you can come and hang out with me, smoke cigars, have a cocktail, have some coffee, whatever. And you're at your charts anyways when it ends. That's when the market opens, so you're ready, willing, and able to carry out a plan. And so if you were there and you were a bear, you'd be profitable by now. That's it. You do or do not. There is no try. I tried to be there. No, you didn't. All right. So now this might still be bullish, but let's not talk about mights. What we said last week, okay, was this projects the double top, okay? And if that follows through, the ones that did sell, they're targeting down here. Doesn't mean we're going to get there, of course, but that's what it says. Okay? Now, along the way, if we get stimulus, boom, up. That's it. No stimulus, down. And that sucks because we get into the sideways range going into the election, and that's not cool. I mean, it just means we have to hold our breath until the election. I like making money today. So, anyways, I'd rather it go up. That's all. But we know, and everyone in the swing group, I mean, we've talked about these types of opens a lot lately, and in particular on this the fourth year of an 8-year political cycle, we expect these types of market conditions to prevail more this year than typically. And so one of the things, like one of the problems, quote unquote problems we're working on in the swing trading group is, there's been a few people that were up 200 or 300 pips per trade and eventually got knocked out at break even. Well, there's a big problem, right? Well, it is actually a big problem because it's never an easy decision to make. But the first sort of response to that is it's not the trader per se. It's more of the prevalent market conditions based on the cycle we're in. And I said the worst thing that trader could do is adjust based on what they learned this year and apply that to next year. But I'm like, but that would be the wrong move next year. So instead, you should recognize what happened this year and make it unique to this part of the cycle. Meaning, stuff we talked about in August was that you should plan big, like you should plan for the big moves, but you should really expect small. And, in a swing trader considers 200 pips a small trade. So for example, if we go back in time and you're like, okay, this is an obvious swing trade, this is the obvious exit, that's all there's likely to be in the fourth year of an 8-year political cycle. So anyways, this is the stuff we do in my swing trading group. We have to deal with these terrible, terrible problems. Okay. So here we are with stimulus. But that's also an M2, that's also a monthly central, and there's some up there. But really, that's not what this 55 EMA is suggesting. Okay? The 55 EMA here is suggesting that the best has already occurred. Osalato says, hey, greetings, Wayne. How do you know if brokers enter your trades in the interbanking system besides asking if they are A or B booking you? Well, I don't think anyone would admit to that. I mean, I remember one time I got an email from FXCM that says they have a new policy. Not only will they slip against you, but they'll now allow trades to slip in your benefit. And I'm like, they sent this to thousands and thousands of customers. I'm like, what did you just say? Oh, yeah. Not only are we going to slip against you, well, we're also going to slip for you now because, the stupid government got on our ass. You're like, what? Apparently there was an algorithm that says slip to all these guys. So that's what I mean. Like, you got to be careful. If you go to a broker that says, hey, man, we're the cheapest, we can get you in all your trades for a half a pip plus everything they slip you. So you got to be very, very careful going cheap. I don't like anything cheap. I like affordable. I like value, but I don't like cheap. And so if you go with a broker that advertises cheap spreads, they're lying. They're just not. I mean, you have to make money. No one's going to do it for altruistic reasons, right? But going back to the question of, would a broker admit that they're B-booking some of their clients, if not all their clients or most of their clients? No, they would never do that. And by the way, the difference between an A book and a B book is B-book traders are not expected to ever make money. So essentially, the broker trades against them because now they're holding the position, trading the opposite. They're taking the opposite side of the trade because they know eventually you're going to lose your money. That's their attitude. They're like, this client's they're stupid. They're going to lose their money. So they're going to bet against them because they could earn, let's say, the 2-pip spread, or they can earn 100% of your loss. So they're like, oh my God, this person's only got 5K in their account, but they're going to blow that up. So a broker trades against them instead of entering it in the into the interbanking system, right? And then an A-book trader is like, oh my God, this trader's actually good. We can't make money betting against them. So we'll go ahead and enter those into the interbanking system. So like, these guys are good. We'll actually execute their trades. These other guys, they suck. So we're going to trade against them and make a lot of money. Okay. That's the typical process in the biz. Okay. Now, no one would ever admit to that. Okay. So what do I know? When I first started working at Trader's Way, like really in the beginning of the relationship, we had the Swiss National Bank debacle. And I wake up one morning, just like Drew Niv woke up one morning and found FXCM USA $500 million in debt because of the Swiss National Bank. Alpari shut down. Alpari was a big broker. They shut down. Like they went out of business. And FXCM in the United States had to receive a bailout and then shut their business down because of the Swiss National Bank. So ask yourself, well, why? So I call up Trader's Way and I'm like, oh my God, you got to send out an email to the clients. And they're like, why? I'm like, because brokers are going out of business and people are freaking out. And they're like, oh, well, we're totally fine. I'm like, I know, send out an email, tell people. And they're like, okay, cool. So what happened? Well, Trader's Way all the trades were in the interbanking system. Like it wouldn't affect the broker. The broker gets paid to execute your trades. So they're not holding your trades. You see that? They're not holding your trades and they're not betting against you or whatever. They're just, you say execute. They're just like, okay. And they send it to a liquidity partner, which costs money. And there's multiple liquidity partners. And those liquidity partners find someone to take the opposite side of your trade. And you're matched. And now it's you and the other trader. So how would brokers go out of business overnight if they had executed and matched you with another trader out in the world? The only way to have gone out of business, of course, is if they never executed the trades. And suddenly they're holding $500 million worth of trades and there's no market anymore. You lose all your counterparties and all of a sudden, whoa, dude, we're screwed. Yeah. So that's all I know. So I haven't had a meeting with Trader's Way and they're like, oh my God, well, here's the 3 reasons why, clients should work with us. I've never actually had a conversation with them about stuff like that. I know from my own life experience what happened, and that brings me confidence. Okay, so hopefully that answers your question, Salado Club. Okay, are we buying euro? Well, first of all, Sandil, this, what you see on the chart, we did, I think it was Thursday. And I believe Wednesday or even Tuesday before I had a big conversation. So this goes all the way back, Sandil, to almost a week ago, not quite a week ago. Okay. So back then we discussed this line in the sand, the 21 EMA. And I said, as long as we're above that line, we are bullish and aggressive. And we got the bounce and it took off, but then it came back. So I think it was maybe Thursday. It was still above that 21 EMA, but you see how it flattened out? And we talked about this right? If not here in my live trading group where I'm like, okay, technically we are still above that 21, but that's not how a bullish 21 behaves. And there's a high probability of a breach. So then I spent maybe 20 minutes discussing what does the breach mean and how do we handle the breach in our planning process and how do we change our expectations for the trade. We're still bullish, but everything's different, okay? And then we get to here, which was the expected outcome of selling. So that's why I sold it to the top, because we talked about it last week. Like, look, we talked about it last week, so of course I'm going to sell it. But it doesn't mean we're bearish. But the technical analysis of the bullish situation, if you will, is significantly different. Okay? I went from here, bullish and aggressive, to the same price, and I have significant doubts now. And in fact, I'm actually trading against the up, even though I'm a bull. Okay, you see that? So I'm a bull, but I'm short. Okay? So one of the things we talked about in Off the Charts with Wayne McDonald yesterday was the difference between, like I said, chasing yield is dead, and that people should be focused more on making money through trading versus making money through income collection, like dividend payments or yield coupon payments, right? In this case, it's kind of like that. Like, I'm a long-term bull, but I'm short and I'm profitable. Does it mean I'm no longer a bull on this pair? Oh, absolutely not. I'm totally a bull. I'm absolutely crazy bullish. But I'm short and making money. So there's a difference, right? All right. So if I were planning this with no sort of, if I didn't look backwards and if I didn't think fundamentally, this would be the best price. Okay? This would be the best price for buying. So I think what might happen, I think what might happen in the next day or two is kind of like fart around here for a while and then work our way back up. But I can't think that way right now because that's a bullish, I'm being stubborn. I'm not being bullish if I do that. So what I think is really going to happen, or like, how about this? What the charts tell me is that we were trying to trend and it's too early. It's too much before the election and all that. There's too much uncertainty. So this is what's going to happen in the next 5 days. That's what it says. And then if we get that, we're range bound, moving sideways, lacking trend as we wait for the election. Okay? Now, the amazing thing is if you know your technical analysis enough, you knew that last week. None of this is new. In fact, I explained it to you Friday and Thursday, and maybe even Wednesday. So it's not a new conversation, but it's interesting, like that's what technical analysis does. Okay? It's like reading sheet music. So is this bullishness over? No. No, it's not. I might want to buy at 18, but you're force feeding the goose a little bit, you know? But maybe it's okay if you buy, if you got good lines, like if you are buying at good support, for example. So this whole zone between 18 and 117.80, it's a buy zone, but this technical analysis is saying it's actually very mediocre. Okay? I'll probably do it anyways. Okay? Or another way to look at it is this is sort of like a hedge, if you will. So if it comes down to here, I make money, great, and I'll put it in my pocket. If not, it's going up and cool, right on. I'll catch the breakout pullback. But I think as we get closer to the election is going to have a bigger impact. Like, like we're approaching the event horizon. You guys know what the event horizon is? It's the point in which, imagine you're in a spaceship, you're cruising around in the Starship Enterprise. It's the point in which you approach the sun, for example, with high levels of gravity. There's a point, literally a line in space-time, that says if you touch this line, you will not have enough power in your engines to turn around. It's sort of like being in a canoe and you're about to go over the waterfall, and you've turned the canoe around and you're paddling as fast as you possibly can forward, but the river's taking you backwards towards the waterfall. And really, there's nothing you can do. You're not strong enough. You're not fast enough. It's just, you can't win. It's impossible. So there's a point, where the gravity is just stronger. And the interesting thing is it starts pulling more and more and more and more and more as you get closer and closer and closer, and it gets worse and worse. It's impossible, right? So anyways, there's maybe we're approaching, that singularity in the price time continuum. The singularity here would be the election night. The random variable or exogenous variable would be the stimulus. Okay. And a stimulus package is announced, boom, up. That's it. By the way, if you're in my either of my live trading groups, we have two, one on a professional track, one on an educational track. If you're in one of those groups, you're welcome to trade the election night with me in real time. We'll watch the news, we'll listen to the news, I'll have things going, and we'll just watch it and together, and hopefully get some trades on. What do you stink? Smell like a plan? Yeah, boy! Cool. Compliments of the firm. Thank you for being part of the team. Oh, by the way, I've pulled all the pieces together for my book club. And I've given them all to the developing team. And I will be meeting with them tomorrow to make sure they have a good sense of what I need and how these tools work. Because we talked about the tools I need. And because I know what I need, it's faster for me to kind of do it. So I pulled everything together. I'm like, okay, we're going to use this, and we're going to do that, and we're going to add that, and then you're going to custom make this, and this is what you're going to program, and this is the output, and this is how it all goes together into a business model, and this is, and so they're going to build it, and then stitch everything together, and create everything that needs to be created. So I'm hoping before the end of the year, we will have a book club. And I'm hoping that we can just start with my book because I'm the author. And it'd be really weird to read my book, especially after all these years, right? But maybe we can do my book in December, and then starting in January, like we'll call that like a beta run, a dry run, if you will, and see how all the pieces go together and all that kind of stuff. And then moving forward, I'm going to design it so it's not Forex. Okay? It will be everything to do with trading and investing and economics and finance, including psychology. So it'd be a place to learn technical analysis. It'd be a place to learn fundamental analysis. It would be a place to learn about trading cryptocurrencies. It'd be a place to learn about trading Forex. It'd be a place to learn about bonds and S&P 500 and real estate, and then the trader psychology and amongst of all of that, and also sort of economic and financial history. Right? I want to Another one would be like cycles and super cycles, and like really, 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 really educational. And I'm going to design it. Here's the really cool thing, right? Okay. The interesting way I want to design it is I want to take these books that we're reading and make college level courses using the books we read as our guide, like a textbook through a course. So my vision now is reading 4 or 5 real estate books. Some might be esoteric, college textbook kind of stuff, and others might be sort of, I don't know how to describe it, the get rich quick stuff, but whatever, like different points of view from different types of authors with different types of writing, but all very, practical. That's what I'm looking for. Not just, university learning and not just street learning, but sort of a combination of practicality, like practical information, and then putting it together in like a college level course. And now, not only are you reading books and learning about authors' opinions and getting sort of cool, interesting tidbits about their point of view, but actually on top of that, if you so choose, it can be organized like a college course and come out with, a certificate of achievement for like real estate or something. Wow, I think it could be really cool. So anyways, we're on it, baby. We're on it. Okay. And there'll be different levels of membership for people. Like a lot of people are like, I don't want that college level stuff, but I would like to read books and discuss it with people and have a guide as we go through it and all that. Like, okay, cool. And then there'd be up and up sort of thing. So anyways. Hey, Maida, did you email me on Friday? Did I miss your email? Maida says, you think there still will be a result on election night? I don't know. My gut feeling, I have nothing to base this on. My gut feeling is people know. I don't think we're going to everyone was borderline, right? No, I think we're going to know. I think someone's going to clearly win by, maybe not by landslide, but clearly win. Like Hillary, like you get halfway through the night and you're like, oh, snap. Because I'm telling you, once again, the Democrats that I know are absolutely certain Biden's going to win. Like easily. It's done. In their mind, it's a done deal. They've band together, and there's no way Trump's going to win because he's such an idiot, and he's so stupid, and he's so embarrassing, and what he says is so outrageous. He's such a fool. It's almost criminal he's president. So we got all this wrapped up. We got Joe, and Joe's good enough, right? That's a dangerous thought process, right? So anyways, they're certain he's won, which might be the best opportunity for Trump because they're so certain. So, cool. So whatever. So I think those Democrats are absolutely correct and it's a done deal, or they're horribly, horribly wrong again, right? But they're like, well, Bloomberg and CNBC and, CNN, and they all agreed and all the polls said Trump was going to lose. Yeah, I get it. The choir, right? Preaching to the choir. So, I think we'll know election night. Someone's going to win. Now, of course, if I'm wrong, it will create a very interesting trade. Okay? Right? There's a very interesting trade in that, and that's also why I want to be there. Because maybe it does come down to 50-50, but we don't live in the same world like when it was Gore and Bush. I remember when I ran my startup in San Francisco. I remember the exact moment in time that happened. I was a young man, right? Like, what was I, 28 or something when that happened? Like, the world's changed. And, okay, Gore and Bush was close, and we had to go to the Supreme Court to figure it out, right? I think our our world is much more polarized. Right? Much more polarized. The right is more right. The left is more left. I don't know. Even things like race seems to be much more divided than it used to be. Now, maybe there was a reason for it, right? Like if you look at that time, what was going on, like Rodney King and stuff, were getting beat up by cops. And if you remember the interviews at that time, the African American community in LA, they're like, yeah, this has been going on forever. Like, why Rodney King? Like, well, someone caught it on camera, right? But they're like, yeah, this was normal. This is, you would always get pulled over and beat up by cops. So like, well, of course, what's different, right? So obviously we haven't fixed all that stuff, but we are more polarized, right? We are more polarized. So I think someone is going to win and someone is going to lose. And because we're more polarized. If there were a lot of people like, well, like back Bush and Gore, maybe it was a little more wishy-washy. Maybe there was more people that were in the middle. They might vote Democrat. They might vote Republican. I don't think we're that way anymore. I don't think we're there. This is my guess. Right? But it seems to me everything's polarized now. Everything. Everything, right? Everything seems more polarized. And it's weird. I mean, it's there's an economic reason for it, and I don't want to go into it here, but there's an economic reason for it, and actually economic/political, and it's actually fairly normal. We're just in a part of a super cycle for, but anyway. So I'll just cut it short. We're polarized, more polarized before. Someone's going to win. That someone needs. You see, honestly, of course, I have only a guess to offer, right? Because I don't know anything, and you can't analyze the political scene and then throw out, a fact like I can with charts and stuff. But it's just there's going to be a clear winner. That's my opinion. There's going to be a clear winner. And it's a choice. So we talked about this again, like off the charts with Wayne McDonald. Yesterday we talked about it. It's a choice between how to handle our financial or economic situation. We're choosing a system in which to distribute income. That's all. It's just a choice. It's a political choice. Both have consequences that are negative, but both have consequences that are positive. And one of the beautiful things about America is that every, 8 to 12 years, let's say, we ebb and flow between the two, and somehow that brings our balance and harmony. So you can have 8 years of Bush, you can have 8 years of Clinton, then you can have 8 years of Bush, and then you can have 8 years of Obama, then you can have 8 years of Trump, and then, right? So it's really cool versus 38 years of the same person in charge. And of course, when you look at game theory, if you are essentially a perpetual power holder, you play the game differently. Right? So anyways, again, one of the beautiful things about America is that it can go back and forth between the choice it makes. So you can make a choice. Let me simplify it. You can go with the choice of Republicans that push the economy up. And lots of people, not everybody, but lots of people, half the people in America, make a boatload of money. And then you get rid of the Republicans and say, okay, if we're all rich, we need to redistribute that money to everyone else in the economy. So you vote Democrat. Okay. I don't know. I know this is a gross oversimplification, but there's enough truth in it to make sense. So one is focus on productivity and growth. It's small business. They don't focus on wealthy people. It's just the consequence of that economic decision. Remember, it's an economic decision. If you want to run your capitalism that way, the upside is asset appreciation because you're focusing on small business and growth and productivity. So you're just simply going to make more money because the policies support that. That's what the policies do. The problem right now, like for example, and again, we talked about this yesterday in my webinar, where 50% of Americans don't own any assets. They're not invested in the stock market at all. At all. And I said, well, that's an interesting thing because we know for a fact that the Fed, when asset prices have fallen, meaning when the real estate market has crashed or when the stock market has crashed, what happens? The Fed comes in and pushes them up. That's what they do. So if you're smart enough to play the cycle on top of it, so imagine you're able to buy when the real estate market is down. You're able to buy the stock market when it's down. You buy low, then the Fed comes in and jacks it up. So if you know that to be as factual as I possibly know, it will go up. You will make money. It's by design. It's designed to go up. That's what quantitative easing does. It pushes asset prices up. So in America, it's easy to make money. You have to own something. 50% of Americans own something. Now, most Americans just have a retirement account at their corporation, and you put $300 a month into it, and your company puts $50 a month into it, and it goes up and it goes up, and compounding over a lifetime, it goes up a lot, and you've saved a lot of money for retirement. Meanwhile, when it gets into trouble, the Fed comes in and pushes up asset prices, so your retirement account gets bigger. But also, you own a home, so you own that asset. And when your neighbor's house gets cheap because they paid too much for it, because they bought late in the cycle, so they paid way too much for the house, and because it was late in the cycle, they had to pay much higher for their mortgage and all that kind of stuff. And when the economy gets bad, then suddenly, can't afford the house because they lose their job, and the prices start falling around you. So you can buy your neighbor's house for 40% less than he bought it. And then what? The Fed comes in and jacks up asset prices through their policies, because that's what the policies do. So in America, all you have to do is buy low, whatever asset you buy during the down cycle when most people are telling you not to do it. That's when you should be doing it. You should buy the stock market when it's down. You should buy the housing market when it's down. And then the Fed's going to come in and give you free money. That's it. That's how America works. It's been happening since the 90s, let's say. Since Greenspan. That's it. That's how you make money in America. You own something. You own a business, you get support. You own a house, you get support. You own the stock market, you get support. So the bigger question is, what about the other 50%? Well, if you knew you got free money and the government was always going to keep you rich, why wouldn't you do that? Well, that's the problem. Maybe that's why we have a divide. 50% of the people don't know that or can't benefit from it because they don't own a house. They don't own the stock market. They're just living on their cash. So you have 8 years of up and rich people get richer. Let's say they become 50% richer for 8 years. And then you transition that government out because the other 50% are like, oh my God, how come I'm not rich too? So you get rid of that government and you say, let's redistribute some of that money. The stock market drops 30%. And you redistribute some of that money back to people that didn't make money on the rally. And then that government goes away and you hire the next one, right? So meanwhile, notice the net. You're still up 20%. So then you buy in here again, and then it goes up another 50%. And you go through like a cycle like this, right? Bush, Obama, Trump, Biden, right? And it's not wrong. One isn't right, because we know capitalism has its flaws, and one of them is income inequality. Okay? And it comes from the owner of an asset makes money while he sleeps. People that don't own assets have to go to work and exchange their blood, sweat, and tears for money for food. So there's a limit on that. You understand that? You can only work a certain amount of time, and you can only work one job at a time. So if you work in a canning factory, by the way, if you typically can 1,000 cans a day, but you find a way to make 1,100 cans per day, you don't get a raise. You don't get 10% more money, right? So there's no incentive. So you just show up and be there 8 hours and then leave the canning factory and, I don't know, go to the bar, right? There's a limit. When you own assets, it's unlimited upside. And the interesting thing is now you own something that's worth something, so you can borrow against it to buy more assets. Huh? Right? You can borrow against your assets to buy more assets, so now you make more money. You still sleep the same amount of time, but you make more money. Versus someone else going to a factory, spending 8 hours there, and there's no more way to make money. You can't sit there and say, how can I make an extra couple $100,000 this year at the factory so that I can invest in real estate? There's nothing you can do at the factory to make more money. And that would be an ungodly sum amount of money. You're like, that's 5 or 6 years' salary. Yup. So how do you make that kind of money? Well, you should be an entrepreneur. Okay? Owning an apartment building might make you rich. Being able to trade the financial markets, whether it's Forex, the stock market, the bond market, whatever, can make you filthy stinking rich. Working at the factory won't. So that's why we have this ebb and flow. So for 8 years, a ton of people make a ton of money, but not the other half. So half the people make a lot of money. Then we have to focus on the redistribution of that money so that we can address income inequality. But really, ultimately, what we're trying to do is not kill each other. Okay? So Ray Dalio right now says the biggest threat to America is that you leave the house and people want to kill you. And it doesn't matter if you're, what color you are. It's just we're at each other's throats about everything. Right? That's not a productive society. That's the bottom line. Okay? So to be more productive, maybe it just makes sense for a few years to find a way to get the lower half. I only mean that in those are the ones that own assets, and then the other ones that don't asset. So how do we get Americans that don't own assets to own assets? Okay? Now imagine if 50% of more Americans start participating in the financial markets, how much that money being deployed would do for the market, your housing market, the stock market, everything would go up. So we need to do that. But how do you get someone that's not in that social stratosphere? Like, how do you get someone that right now would never in a million years own assets to the point where they're owning an asset? One book I want to read, and it just made me think of it. There's an African-American comedian, Hart. What's his name? Kevin Hart. Apparently, he wrote a book on economics. He's like, he was a young man and he started to find success and he's making millions of dollars. And he realized that in his world where he came from, people didn't have credit. People didn't save. They didn't buy assets. He's like, if someone was a fool and gave you a credit card, you were going to jack that. Right? And you take what's yours and you jack up the credit card, take all your stuff, default, whatever. It's just part of the game. You're a hustler. Some idiot gave you a credit card, you're going to jack him. That's how it goes. And he's like, people didn't think about their 401ks and stuff. So he wrote a book because he's like, he had to educate himself. He's a young black man. All of a sudden he's making millions of dollars. And then he goes to buy a house and they're like, you don't have any credit. And he's like, yeah, I got millions of dollars. Yeah, but we're not going to give you a mortgage. And he's like, what? So he had to learn all these things. Apparently he wrote a book and he said, for his neighborhood, right? Like, and I'm like, cool. So put that on the list. Put that on the list. Let's see if I can find it. See, that's the type of thing I'd like to read. It's not the comedy one. It's the one on economics. Let's see. Well, he wrote Hustle Harder, Hustle Smarter. That sounds good. Oh, no, wait, that's 50 cents. That's 50. It's funny. I put in Kevin Hart specifically, and they're like, well, how about 50 Cent? Wait, Kevin Hart's not 50 Cent. Like, why would you give me 50 Cent? 50 life lessons. So I don't know if that's it. I'd have to look it up. The Decision. I don't know. I'll have to look it up. Respect, the art and science of respect. But that's not him either. Apparently, Amazon's like, well, this black man wrote a book. How about that one? No. Kevin Hart's book. Well, what about this black man? He wrote a book. Not him. Where's Kevin Hart's books? Come on, Amazon. Is it Get Rich or Die? But that's 50. That's 50. Anyways, we'll have to look into that. So I want to read Kevin Hart's book about economics and finance because in an interview is where I heard it, and he was like, if people just they were not educated in that world. People didn't think 401k. They didn't think ownership. They didn't think and so he's like, so he wrote a book. So I think it'd be fascinating. Kevin Hart is a comedian that's made millions of dollars. So one of the other things that's unique about Kevin Hart is he took over the management, promotion, and sort of the distribution of his stand-up comedian tour, his stand-up comedy tour. So usually what you do is you hire a manager, then you hire a promoter, and then you hire all these people, right? And you do a concert, you do a gig in front of, let's say, like Kevin Hart will do that in front of 15 or 20,000 people, right? And at the end of the day, they're like, okay, here's your $5,000, Kevin. You're like, wait, we sold $30 million worth of tickets tonight. Yeah, well, we had to pay for this, and we had to pay for that, and you had to pay this guy and pay that guy. And all of a sudden, there was nothing really left over. And he said he was smart enough where he took over all of that. And he's like, I sell all my own tickets. And then he'll talk about, he'll do 2 shows on a Friday, and he'll do 3 shows on a Saturday in a stadium. And I'll sell out 3 shows in one night. He'll go out and he'll do the same bit. And you're like, holy smokes, right? Hustler, right? Well, that's cool. So he sounds like a cool dude, and he manages the whole process, and all the money is his money because he takes all the risk. Smart. That's what we like. So anyways, so I'll put his book on the to-do list, I think. Is that it? I know that's one of his books. I don't know if that is the book. If that's the one about finance. It doesn't look like that's it. It looks like his biography. That's not it. Life lessons, that's not the book. And that's probably where I heard it. as Joe Rogan podcast. So anyways, let's get back to this. All right, so that one's working out fine. Cool. What do you think of the entry? How would you grade that entry? Pretty reasonable, right? So Adam R says, I would love to know how you would do the trading setup if it's not trending. In my opinion, it isn't trending. This is the non-trending trade, in my opinion. Now you might say, well, geez, Wayne, this is definitely a downtrend. I don't see it that way. Yes, I'm short. Yes, I'm making money. But to me, it is not a trend. We have gone from trending to range, and to me, it's a range trade. But watch Friday's video and plausibly Thursday's video, and even plausibly Wednesday's video where I set all this up. On Wednesday, I was bullish. On Thursday, I was setting up the bearish. On Friday, I was waiting for the bearish. On Sunday, I took the bearish. So it took me 3 days to get into the trade. And then I shorted at 118.50. Like, it's actually so straightforward. It's silly. Like, oh, you short at the midpoint strike level? Like, what else did you have? Well, it took me 3 days to get that. But yeah, shorting at the midpoint strike level is stupid easy. Okay. Cool. So that's that. What else is going on in the world? Okay. The other thing I want to point out still is now on the 20th, we hit the projected high for Bitcoin for the month of October. By the way, we knew this back here. We didn't know it'd go up there, but we knew this line. If you hit this line, you take profit. And we were there on the 21st, the 22nd, the 23rd, the 24th, the 25th, and we're here on the 26th. Not a random walk through Wall Street. Even with an exogenous shock, it did exactly the right thing. This is your buy zone. This is the perfect exit. And now if you had exited on the 20th, it's been almost an entire week and you haven't lost a penny. Nor have you wasted time staring at it. Isn't that neat? So I like that. I'm only pointing out that your tools work. Even with an exogenous shock like what happened to Bitcoin, that wasn't a technical move, but it followed technical analysis absolutely with precision. Perfectly. Okay. Got to be careful in here. Okay. So the reason I say that is things have changed a bit. And we have a top here. And we have a bottom here. Okay. Essentially. Or you can break it into two rolls. You can do it this way. And then maybe you can peel this onion. Okay. So, let me get this even more refined. So, blah. This is kind of what I think the technical word for it is. Okay. Okay. This is also in a similar situation. Bears live there. right? Bulls live here. And we're in the middle, which means mediocrity either way. Okay? So not necessarily the best entry. Okay? So let's go to more yen pairs. Let's take a look at these. Okay? Bearish or bullish? Well, why don't you just use some statistical analysis and say, well, it's got some bullishness. We know there's risk associated with this trade, but that's what it is. And we know, or we can conclude that we have a floor at 74. It's not very far away. It's not a lot of pips, but it's there. Okay. And then I think we kind of have this going on, 74.50. So it's not a lot of pips, but it doesn't look as bearish as it was before. And now you might consider that a double bottom of a double bottom. Do you guys remember talking about this? Remember how we were talking weeks and months in advance? And you'd have to tiptoe in to the double bottom at the double bottom. Currently, the double bottom's at 74. Okay? If you have a longer-term point of view, not a complicated trade. If you're just stuck on a 15-minute chart, you wouldn't even see that move. Lost. Okay? How about this? This is day trading. This is swing trading. Okay? That's the swing trade. And then I said you day trade into the rest of the swing trade, which means up, 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 down, down, buy. Up, 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 down, down, buy. Today's already done. It's already done. If you do something now, you just don't know what you're doing. So what you should be doing is planning tomorrow. So if it retraces back to 70, are you going to buy it? That's the decision now that you have to make. And quite frankly, you may have already missed it. So doing something now, you just don't have the control that you're going to need to be a success. You might make pips on it, but you'll never have enough control or discipline to be successful in the long run, because you'll always be tracing trades that are already 50% done. Which means you won't have the discipline to get out at the target either, so you give another 50% back, and lo and behold, you wasted 2 days of your life and didn't make any money. What's the benefit of having big swaps? Linda, a swap is your interest payment that you collect. So it's like saying to a landlord, what's the benefit of having big rents? You're like, well, I make more money. Okay? A swap is an interest payment. So, like, if you own a bond, you can lend money to a company like Ford. So you look, right? You lend Ford $10,000 for 5 years. And they will pay you 5%. But they'll divide that and pay you 2.5% twice a year, for example, is the way to look at it. Okay? So every 6 months, they'll pay you 2.5%, which is half of the 5% that it says on the bond. So you're going to collect some income. And then at the end of 5 years, you get your $10,000 back. And of course, you keep your interest. So what you're asking me is, what's the benefit of earning 5% or 6% or 7%? Well, you're collecting more interest. That's what a swap is. Simply, really, the way that Forex works is truly, especially if you're a longer term trader like a swing trader, a position trader, or truly like an investor like George Soros, it is like a bond. Okay? So when you work for a professional trading firm like, let's say, a bank, and they hire you as a Forex trader, you work in the fixed income, commodities, and currencies department. FIC. So as far as they're concerned, Forex is fixed income. Fixed income are bonds and treasuries. And it's fixed because for 5 years, on a very specific date, right? 5 years from now, on one particular date, you get your 10K back. Okay? So Ford gives you your 10K back on a precise date 5 years in the future. Meanwhile, on precise dates, you collect a certain payment, a swap in that case, right? A yield, interest payment. It's all the same kind of vernacular. On very specific dates. Everything is fixed. Fixed income. Fixed meaning everything, the amount of money on the dates which you collect, how much you collect, when do you get your money back. It's all fixed, but it's fixed loan plus payments, which are income. It's not pure mathematics is the swaps can be positive or negative depending on the central bank. No, it's not really depending on the central bank. Now, maybe in today's world you say, well, if you go with euro, they pay you negative something, or if you trade against it, you have to pay negative something else because currently, Europe and Switzerland and all that, they're negative. Okay, yeah, but it's never happened before in life, right? So it really has to do with the differential. Okay? The differential, the difference between central bank 1 and right minus the central bank 2. Or if you're trading the other way, central bank 1 plus central bank 2. Whatever, right? So it's the differential that's really how you do the calculation. It's just an anomaly that some currencies are negative right now. Also, the other thing that you guys often miss, like here's another way of looking at it. You go to make a trade and they're like, oh my God, the spread is 300 pips. Right? Have you ever been caught in this one? I could never trade that. I could never trade that currency pair because the spread is 30 pips. I could never do it. And the funniest thing about that often is the one you do trade is 3 pips. And each pip is worth $10, and you have no problem. And then this spread with 30 pips, but each pip is worth $1. And therefore, you should be indifferent. It's the same thing. But you're caught up on this 30 pips. You're 30 pips, but you're not looking at the value of the currency, which is really interesting, right? So you might find one spread is 30 pips, the other spread is 3 pips, but they're equivalent. The difference is the value of the currencies because they're priced in currencies. So if you're trading the Thai baht, right, Japanese yen, you might have to pay a 300 pip spread, which is worth $30, right? For 300 pips, you're like 300 pips. No. It's right. And then here's the interesting thing about economics too. You should be able to take this Thai baht yen, this other thing, and then you can say which is equal to one bottle of wine. So now you'd have to be able to calculate like how many bottles of wine is, the pound Swiss franc worth today, and you'd have to do the calculations. In college, you'd have to say 1.63 bottles of wine. But you should be able to do it. Okay? Cool. So how do you grade this one, guys? Remember, this is actually, if you look at this area here, which we discussed in great detail, is the weekly buy zone. It's a swing trade. And then these are shorter term trades, I think, or is this weekly, monthly? Might be monthly, weekly. No, I think it's daily. These are daily, right? This is Monday, Friday, Thursday, Wednesday. So this must be Wednesday inside of a weekly. And then this is Tuesday. But what I said is you might have already missed it. This might have been it. You see? So what did you do today on Monday? You traded Tuesday's trade. Okay? And this plan here, the first hour of the week, you already had this planned on Friday. You already knew that. You already were done. Your trade planning on Friday would have said this price or this price. Okay? Your Friday front run would be buy in here if you were a bull. And now you're already planning tomorrow and the rest of the week. You must get that. It must sink in. Right? Sometimes it sinks in slow, sometimes it takes years, sometimes it's fast, but it needs to sink in like, I don't know, sleeping on a thumbtack. Okay? And once you get it, you'll understand that today's trade is based on analysis of tomorrow's market. And that's what you might have had to do already. So when you log into New York or even London Open, it was already done, right? So anyways. Yeah, so are these weekly or monthly? It's weekly. Yeah, and those are dailies. So anyways, there you go. Okay. So there's that. Let's take a look at pound. Okay. This one still bothers me, mostly because I don't want the risk of geopolitical risk, and I don't like being battered by headlines and rumors and speculation and tweets. I just don't like that stuff. So I know when you get this right, it pays a lot. I just don't like it. So right now we're in the middle. I wouldn't do anything here. Even if I was bullish or bearish, there's nothing to do here. You might say, well, Wayne, it's going to be a higher low. How do you know that? Why can't it be a lower high? So pass. That's all. Pass. Okay. Does this look good to you? I'll still be a bull as long as we're above this area. And I need to look at this as an area of concern. So I would essentially look to trade this as a range because I am bull. I do want oil to go up. I want the Canadian economy to improve. I want the yen to weaken. So I am a bull, but this isn't very bullish. In fact, I would say there's no market. So what I actually do, because here's a cross and here's a cross and it's all over the place, right? So I argue in situations like this that there is no market. There's only price action. So the thing is, I'm a bull in a range. So if I were to do anything on here, I would do like this. Now, contrast that with the other two currencies I just showed you. We were in the middle here after a scenario like this. And you're like, well, someone might take this down. Well, yeah, but someone else might take that up, and you don't really know. The odds at best are 50-50. So I only want to buy when it's way oversold, and I only want to sell when it's way overbought. And being in the middle, it's neither. So, like, I can't consider those other ones, but I could consider this. And if I get the proper technical analysis, of course. But, okay. Do I, not that way, Blue Boy? No. No. I don't hedge in a range. I just get out. Take your money. Dude, there's so many awesome trades. Like, there's no need to hedge. Oops. Right? If the trade's dead, get out. Book your profit. Go find a better trade. And I gotta label this. This might come in to play in January, I think. But anyways, let's see. So we got that. Pound. Is there anything else on these? What's going on? Pound, Kiwi, Euro, Aussie, CAD. Oh, you know what? I want to check. I want to do exotics. I want to do exotics. All right, sorry, Ryan just pinged me. What was I going to do? What was I going to do? Nothing's right, I'm told. All right, so let's do exotics. We did commodities. We did some yens. So then we'll do some dollar pairs. And we'll call it a day. All right, so what direction do I have this set for? Am I a buyer here or am I a seller here? Benjamin, that's what we do in our swing trading group. So why don't you join the swing trading group? fxbootcamp.com. I mean, we do it every week. That's all we do, every week and every month. So if that's what you want, try it out. All right, so here we are now, and the interesting thing is if we get an acceleration in our direction. Okay. Oops. So right now, the last 2 weeks we've been riding the 21, and now we have to see if we can get it to turn. So what I want to see here is stay below this, and the creation, that's not going to work properly. The creation, stupid thing, the creation of lower highs and lower lows. Okay? Okay? So we're already looking. We're all pre-established. Everything's pre-established. We're not figuring things out. Remember, if you're trying to figure things out, you don't know what you're doing. You haven't figured it out. So this is all sort of pre-established. This is an exit zone for bulls. That's what a bear would be looking for, where bulls are exiting. Okay? We want to look at roll reversals. We want to look at 4-hour 21s, which we all have this here. And so now you're using price action for your next play, and you're thinking down, 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 up, up, sell, down, 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 up, up, sell, down, 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 down. That's the plan, Stan. Okay? Okay? So that was the plan for today. Your plan for tomorrow is this. That's it. That's that. Not too complicated. London Open, New York Open. Now we're on tomorrow. Okay. And notice it's really nothing on this hourly chart. This is all a 4-hour trade. All you're doing is selling it off to 21. Okay, Benjamin, so then we can do that. We can discuss that. I mean, that's what we do, right? So I can break that down. Coolio. All right, ZAR. And then the next one is Peso. Peso's another one that's done very well. It's just farting away, farting away, farting away, doing its thing. We're riding the 55, which gives me caution here. So I have to have the fortitude to kind of stick with it. But at least we've printed this high, which means no higher. So if it was going to reverse, what it's going to do now is it's going to 1, 2, 3. It's going to slingshot up if it's going to turn bullish. So I need to look for that. So I know what a bull's doing here is this. Okay? And if we get above this, I am no longer a bear on this pair. Or I won't be looking to trade it. Okay? Similar to this. Like this was the line in the sand there, and you're like, okay, stop. Now you have to look for your next level of resistance or your next level of bearish price action. So that could be your, your double top, lower low, lower high scenario. And now this is the new out. Doesn't mean we have to be out now. We're still playing the game. But even so, this says double bottom here. Okay. So, and then of course higher than this. I mean, so red flag, caution zone. Okay. This might be interesting depending on like the Trump-Mexico dynamic. It's a complicated question. So that we can look at it. Some dollar pairs here. Oops, that's the wrong dollar. All right. We don't have to do them all because we already did euro dollar. I don't really do USD yen. Kiwi is mixed. Noki has to do with oil. So we already know this one, right? So I don't have to spend much time on this one, but this is where we're short, right? You guys trading this with oil? If oil's going up, If Brent specifically is going up, this is going down. So there's a very obvious trade. Right? Obviously. Okay. What's the Biden Mexican impact? Nothing. All right. Biden's Mexican impact would be Biden's not Trump. I don't think we did Aussie. All right, so let's go through Aussie. This one was a tricky one as well, right? Like, we know Aussie's got a lot of threat to it, but what do we know? Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 uh-oh. Uh-oh. So now we're stuck in the range. And I'm just stuck in an old trade that hasn't failed. The interesting thing here is on the hourly, we're above the 200 now, huh? Interesting. But we are definitely range bound. I'm just stuck in an old trade that was a good trade, an oldie but a goodie. And now there's nothing more to do. So praying doesn't hurt, right? If we're looking at monthlies here, and I believe we are, let me just double check that. Monthly, yep. Okay, I want to check that. So I'm okay monthly. I'm essentially long at the M2, but we're not going anywhere. But I traded this, if you recall, because this was another one that I put together like over the course of hours of describing it, right? There's the double bottom. There's the higher high. WWWD. What would Wayne do? Double bottom. Higher high. What's the next step? Okay. And this is where I bought it. Right on top of the central pivot. I know, right? The 382 Fibonacci retracement. That's it. And I described this to you in great detail. We had long conversations about it. You're like, okay now. Right? Cool. Just remember there's a spread too when you buy, right? But I'm on top of the central pivot. I'm on top of the Fibby. Right? So whatever. So now what? I'm not in love with it. I can't lose any money. So I'm cool with that. Now the thing is, if November plays out, but notice that because of October being so tight, that we don't really have November pivot. So I would expect if this goes my way, we're going to breach 74 and we're going to go higher than that. So I have to target 74.50. Okay. So I'm either going to, right, I'm going to make a minimum 300 pips on this. I'm not even interested otherwise. Okay. So it's either going to do this because of the election, or it's going to do this and I lose nothing. Just whatever. I don't care. Okay. So right now it might do like this. And I'm going to make 300 pips minimum. Minimum. Or I make -3. So my choice right now is I either lose 3 or I make 333. I'm not really interested in anything else. Don't even really care. Indifferent. I got myself a reasonable opportunity. Market conditions have tightened because of the political cycle. Oh, that's not my problem. But I can't impact it either. So I'm like, all right, so I'm indifferent. There's nothing I can do, nothing I can do. There's nothing I could do, nothing I can do. Well, the thing I could do is trade a half-decent trade plan, jam my stop, and forget about it. So I got it set and forget. Yeah, so I got it at 70.50 or something, right? No, I got mine at 71. So I was just later or earlier or whatever the case. It doesn't matter. I bought it at the Central instead of the M2. Cool, right? All right, so we did a bunch of dollar pairs. We did a bunch of yen pairs. Here's the interesting thing, though, to the question of hedging. I'm long Aussie dollar and making money. Pa-ching, pa-ching. I'm short euro dollar and making money. Cha-ching, cha-ching. So you could say, well, Wayne, you're hedged there. Yeah, it's true. And almost certainly one of these is going to make 300 pips. So wouldn't it be interesting, instead of calling it hedging, you put yourself in scenarios where your trades are technically beautiful, and you put yourself in a situation where one of them is going to lose 30, and the other one's going to make 300, and you don't even care which one. But right now, they're both profitable. But whatever, just food for thought. One for me is much longer term, and the other one is just the trade of the week. Irrelevant. Like, it's only 3 or 4 days. Like, who cares, right? I like big trades, right? A trade you're in for 3 or 4 days is a small trade. So if I make money on euro dollar for 3 or 4 days, cool. And then if I make money on Aussie dollar for 3 or 4 weeks or 3 or 4 months, sweet. I'm all happy. Okay? Cool. Well, thank you for being part of the Forex.Today YouTube community. Please also visit youtube.com/FXBootcamp, where you can watch yesterday's Off the Charts with Wayne McDonald, where we talk about trader psychology, we talk about social economics, we talk about a welfare state, we talk a little bit about universal basic income, we talk, which is Friedman, right? Milton Friedman. We talk about, I do some quizzes about a survey done of professional money, large institutional investors and money managers, where interviewed things like, are they going to add to their European stock portfolio or not? Are they going to add to their Asian stock portfolio or not? And so I do some quizzes on that. We go through the calendar of the week. It's just kind of interesting, but we don't talk about charts. In fact, we just, I drank a coffee and smoked a cigar while we did all of this. So it was pretty cash. It was just us talking shop. So if you like that kind of stuff, youtube.com/FXBootcamp. I appreciate it if you like and subscribe and comment. I appreciate your feedback, and I appreciate your professionalism. So thank you for doing what you do so well. So peace on earth. May the pips be with you. May your profits be above average. I will see you tomorrow. Links to FX Bootcamp video training courses and live groups are in the description below. Links to Trader Way is in the description below. Links to my chart templates are in the description below. The links to my book are in the description below. The links to the first day of the rest of your life is in the description below. So I'll see